Well, I've left Southeast Asia, and that's the view from my hotel room. This is the United Arab Emirates. Those are some of the towers in Abu Dhabi. But let's get going, start talking about making some money. We had another great week in the markets. Let's keep going. Hey, everybody, Courtney Smith here. Wall Street winners, January 20th. We are celebrating Martin Luther King today, so we've only got 4 days this week to make money. So disappointing. I prefer to have 5. And of course, this is blah, blah, blah. Okay, let's get into the markets here. So you can see we had an acceleration of the trend in the last 3 days of the week. So you look at that line starting at the beginning of October, almost the perfect seasonal starting point. We've had a 45-degree angle bull market. But notice in the last several days, we all of a sudden accelerated. Now, whenever we see a market accelerate, that means we're probably going to make a lot of money, but it also means that we might be closer to the end of the bull market than the beginning of the bull market. So this is a period when we need to be very excited because we're going to make a lot of money in a very short period of time, but we also have to be getting more and more nervous as the market gets to the end of the bull run. Now, we'll take a look at the seasonality here in a second. Dow Jones, look at that. Look at the selling pressure. That's the red line. It hasn't been this low in years. Nobody is selling in this market. The buying pressure is high, but not too high yet. You see, I'm looking for reasons to believe that maybe the bull market is going to have a dip. Now, by dip, I don't mean necessarily a major bear market like 40%, but maybe a 3 to 5% dip, like we had last August or May, April, May, June, those kind of dips. We haven't had one since the October sharp down move. So here we're seeing that the selling pressure is completely dried up. Well, that's not sustainable. If the price goes up enough, then some sellers will come in and say, hey, whoa, it's way overvalued, let me sell. So that's one sign that we might be getting towards an end, but that's not the best sign. The best sign is actually when there's too much buying, because it means that, well, there's nobody left to buy. Over here in the NASDAQ, same story, acceleration at the end of the week. And now a lot of why we're seeing the acceleration is because of seasonality is very bullish. Take a look at this chart right here. You can see that the green line is the one, our preferred seasonal line. And we should be being quite strong until we get into really the middle to latter part of February. And then the market will start to chop. Notice there's a dip in May, and then we have another big run to the end of the year. So the seasonality this year is actually very, very good with only a couple of bumps in the road. Yield curve didn't do much of anything. Volatility index is getting low. And like I say, when we get down to this 12% level, I start to be thinking about getting long volatility. Now, this was an interesting one. They just bailed out of bonds. Look at what happened. I just been talking about how the market has been rallying towards the end of the year, or end of the week. Well, guess where the money came from? It came from the bond market. That's where they got it from. But on the other hand, they don't really want to take a lot of risk. The market's sitting there saying, we got the right amount of risk. We're at the same level we were in mid-October. There really hasn't been a net increase in risk. To get a really great bull market, you need to have risk tolerance going up. People are reaching and they want more and more risk. We're not seeing that. Global shares also moved to a new all-time high finally. And here's the bond market selling off. Like I say, they sold bonds and they put the money in the stock market. Now, our bond key factors are all going up. I mean, we really have to sit here and say that interest rates should be going up, which means bond prices go down. Now, the purple predictor is a little bit bullish here, but it's been a little bit bullish since October, and it hasn't done very much so far. So we look at our indicators. They tell us that we should see higher interest rates or lower bond prices. The dollar perked up here. It really moved a lot against the yen, and here, and it's now starting to move against the euro as well. So I'm actually looking at getting long there, but I'm also looking to get long gold. We're seeing that finally, I think the dip is over. We're starting to make 1 week highs, not significant highs yet, but I think we need to be looking at being long gold, and I'm looking for gold to head back up to 1600. Now, the problem is the price action is bullish, but our indicators are all down. The indicators are all suggesting lower gold prices. So guess what? If my indicators are telling me lower prices, but the prices are going up, prices are more important than indicators, but I'd rather find a lower risk situation. Crude oil did exactly what I told you it was going to do. And I think we're going to just kind of consolidate in this area, like between 55 and 60, maybe 61. But crude oil is not going to go anywhere. Number one, there's no big demand for crude. That's the real problem. The global economy is slowing. We're in a manufacturing recession in Europe. We still have positive growth around the world, but it's very, very weak. Emerging markets are not very strong. So the demand side, pretty weak. Growing, but weak. The supply side, as I say, is really driven. You kind of look at just three players: Saudi Arabia, Russia, and the US. Saudi Arabia and Russia have been working together a lot lately to try to get the price up, which is what they want, which is what everybody in OPEC wants. But we have a free market in oil in the United States, and so the frackers just come in and say, "Oh, it's high, great," and then when it gets low, then they stop selling oil, and the price goes back up again. And that's why we're in a big trading range, is because the marginal driver of oil prices is now the United States, and that's a free market, so it responds to the price. A Bitcoin we got out of last week, I'm glad. I don't want to have a position in Bitcoin right now. There's too many conflicting indicators, and realistically, we're just in a big trading range right now. So the price is now at the same price it was months ago. We do have a little bit of a rally. I talked last week about how the purple predictor had turned bullish, and that kind of got me out of the market. I'm going to let it calm down a little bit here. I want to see, we've got this little rally that we've had here the last couple of weeks. No big deal in the big scheme of things, but nonetheless, it was a $1,500 rally, $2,000 rally. That's a good rally for sure. That's like almost 30%. So, but I want to stand aside now and have no position for a while. All right. All right, freebies, we love having you here, as you know. But fully paid up members are, well, quite frankly, a little bit cooler than the freebies are. So, all right, fully paid up members, hang on just 1 second.